An early Bitcoin miner has apparently sent 1,000 Satoshi era Bitcoin to trading desks this week. And so in this video, we're going to look at who this might be. And also, could a transaction like this affect the Bitcoin price? Today's episode is sponsored by Cake Wallet, where you can send, receive, and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys. Available today on iOS, macOS, Android, and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening everybody, and a warm welcome again back to the latest edition of Enter Crypto with me, your host Chris Kenyon. This is the channel where every single day I keep you informed and fully up to date on all the goings on in the cryptoverse. If that sounds like something you'd be interested in, then like, subscribe and click on that notifications bell so that you don't miss out on any future updates. Now in today's video, this is from, I found an article from CoinDesk, and apparently 1,000 Satoshi era Bitcoin have been moved or been sent to a trading desk, which gives the presumption that this Bitcoin is going to be sold. So as always guys, let's quickly read through this article and then we'll comment after. So a significant amount of Bitcoin acquired by mining during the network's early stages was moved earlier this week, joining the rare instances where Bitcoin from this Satoshi era has been transferred. Over 1,000 Bitcoin from an early miner were moved to trading desks and custodian services on December the 4th, on-chain data firm CryptoQuant shared with CoinDesk in a Thursday report. These tokens were previously moved 13 years ago, between August and November 2010, and were mined from block rewards at an estimated total cost of $100. Address 35 ... received 999.99 Bitcoin in a single transaction and sent the holding to several addresses shortly after receiving them. The Bitcoin transferred was eventually consolidated in address 1CZ, which now holds a balance of 1,028 Bitcoin. These Bitcoin holdings have a market value of $40 million at current prices, and Satoshi era refers commonly to the period when Bitcoin's pseudonymous creator Satoshi Nakamoto was active on online forums from late 2009 to 2011. We speculate this early miner has sold the 1,000 Bitcoin, sending them into an OTC or custodian service, CryptoQuant analysts told CoinDesk in a note. Because of the transaction patterns of the receiving address, there is a possibility that the Bitcoin was sent into an OTC or custodian service. And several Satoshi era Bitcoin have been active since the start of 2023, and in July, a wallet that had been dormant for 11 years transferred $30 million worth of the asset to other wallets, while in August another wallet transferred 1,005 Bitcoin to a new address, and such activity comes amid renewed optimism for Bitcoin adoption as prices have more than doubled on a year-to-date basis. And so we're talking massive amounts of money here, 1,000 Bitcoin. Although it wasn't a lot of money in dollar value when they were mined, it's now obviously worth $40 million. And my suspicion is that this might be somebody that wants to check that they still have access to the Bitcoin, and the one way of doing that is to obviously input their seed, make sure they send it to another address that they control, and they'll send it to that new address, and that's obviously they know that they've still got access to it. They might also want to consolidate it and send it to a SegWit address or a Taproot address as well, and just update it. So there's a few reasons why they might do it, and those are just the sort of self-custodial options. As it says in this article, they may have just be looking to sell it. They might just have sent it to an OTC desk and just said, listen, sell me this at the best price you can over the next 3 weeks, and they'll just sell it in little, not so much micro sales, but lots of little small sales. We're talking maybe thousands of transactions for something like $40 million worth. And basically they'll have like kind of algorithms that work out when the best time to sell in the day is. So when we get an uptick, it'll sell a little bit. If we get another uptick, it'll sell another another bit, maybe a larger bit, because we've had a bigger uptick than the last one. And they basically do this so they don't spook the market. Obviously, they don't want to just dump $40 million in one transaction, because the slippage on the, I mean, $40 million is not a huge amount in something as liquid as Bitcoin, but it would be noticeable. You know, if somebody sold 1,000 Bitcoin in one go, you would see that on the chart in terms of volume. And so if they did that, there's not going to be a buyer for $40 million anyway. They might sell $5 million, then $2 million, and all this will do, it'll keep driving the price down, and they'll obviously have to sell it for less as the price goes down, and it's kind of their own fault, really. So what they do is they just do lots of little micro payments. That way nobody really knows. It doesn't spook the market, and they do it over a few weeks usually. And that's the way the institutions do it. Or certainly that's the way they've been doing it up to now. As to who this might be, nobody knows. We genuinely won't know unless they actually sell it, or unless an identity gets tied to that Bitcoin address. So another interesting article there. Thank you for watching. Thank you for listening, guys. Don't forget to like, subscribe, and comment below. And I'll see you all tomorrow evening. Take care.